All right, everybody. Hello, hello. So today we're going to just do a quick overview of what happened with Taiwan Semiconductor, TSMC. They are a Taiwanese-based company, as the name implies, and the US stock that trades is not actually a stock, it's an ADR. But anyway, without further ado, here are the second quarter results. So we had net revenue in US dollars of 18.16 billion, which is at the upper end of their guidance range. Gross margin of 59%, which is above their guidance range, and operating margin of 49%, which is also above their guidance range. So very good, very strong results. If we come over and take a look at their financial statements here, let's zoom in a little bit. We can see in US dollars, so current assets or cash equivalents of 42 billion. Total current assets 64 billion, total assets 146 billion. Total current liabilities we have 28 billion. Total liabilities 61 billion, so we have a strong amount of equity built in. Let's see what else is interesting here. We have a lot of here we go. Yeah, comprehensive income. All right. So net revenue 18.16 billion. Cost of revenue 7.4, so very high gross profit. Operating expense, research and development, we have modest expense there. Sales and administrative, very low, very nice to see. Total operating expense, tiny, right? Great financials. Fantastic financial shape. Despite all the chip shortage problems and other supply chain constraints that we've been seeing, including shipping across the Pacific, Taiwan Semiconductor has just continued to be a juggernaut of a business. Coming down a little bit further, we have net income 8 billion, comprehensive income 8.45, earnings per share diluted 0.31. There was a 5-to-1 ratio between between native shares and ADR shares. So if you're in the US, you need to multiply the per share numbers by 5 to get the per ADR share numbers. So earnings per ADR are $1.55. We'll come down a bit further down here. We have more comprehensive income, revenue. Actually, let's skip this. One thing I do want to mention is the amount of investment that Taiwan Semiconductor has been doing is impressive. They invested over a quarter's worth of revenue into basically more development. And, they're building out new plants. They are upgrading equipment, trying to, overcome supply chain issues. And that's an impressive amount. They're projecting that they will continue to grow at, with ROE, return on equity, above 20% and fantastic margins for the next several years. And they're investing accordingly, and they have the cash and the assets to invest accordingly, which not that many companies do. So they are in a really very fantastic position. Let's go over here. Second quarter earnings conference. So this is the slides that they had during the call. We have comprehensive income, again, gross margins, all their margins, very nice, very good, above what they were projecting. Super nice to see. Revenue by technology. Here's the different types of chips they're doing. You can see that they're working their way down. So these ultra small or ultra large chips, are a very small percentage. Taiwan Semiconductor definitely specializes in those hardest to produce chips. It's one of the great moats of this business. Unlike almost any other first of all, chip manufacturing is, there's a bit of a barrier to entry because it's very capital intensive. It takes a lot of intellectual property, it takes a lot of intelligent manpower. You can't just start up a chip company out of nowhere. It's very difficult, takes years to do. So that's already is a nice business moat for TSMC. On top of that, other companies have tried to produce chips and that compete with TSMC, but consistently it is just hard to do. Like, TSMC is such an expert. They have so much expertise, in terms of their business processes, in terms of their internal knowledge base, in terms of their intellectual property, in terms of their trade secrets. They are so good at producing chips that it has been very difficult to compete. We had Apple, come out with some chips in the past few years. It's been questionable whether those have really even, compared to TSMC's chips, and that's despite Apple being, an enormous company, 10 times larger basically than Taiwan Semiconductor, having many more resources. Apple has as much in cash almost as Taiwan Semiconductor's market cap. But despite that, Apple has really, not been able to really do the same quality of chip as TSMC. We can come down to see where the revenue is primarily going. So automotive, only 5%. So as much as you hear about all the supply chain issues, automotive really, for automotive supply chains, doesn't really affect TSMC that much. Smartphones is by far the largest, and there is, always demand for smartphones. HPC, IoT, and that's, those are the biggest sectors. So those are the main things that really matter to this company. The rest of this is, 11%. Yeah. All the supply chains in these areas don't even really affect that much. Balance sheet, total assets, very good. Total liabilities, total shareholder equity. I mean, just look at this equity to liability ratio. That just super strong, super good condition. Very robust financial condition. Cash flows. This is the one area where, it's not super great. We do have, free cash flow. It's not that great down here, but we are investing a ton in capital expenditures, and this is what I was saying before, right? We are, just massive amounts of investment into capital expenditures, new plants, new equipment, increasing capacity. Very nice to see. And yeah, that's let's see. I would say the main risk factor for Taiwan Semiconductor is basically war with China, right? If we don't go to war with China, then Taiwan Semiconductor is a very good business, in my opinion. I think it's a great stock, great investment, but there is, in my opinion, also a real risk of some kind of war between Taiwan and China. And if that happens, Taiwan Semiconductor could be a major casualty. So keep that in mind. And that's all we're going to talk about today. See you guys next time.